Well, economists who are prepared to have a guess at what the response to the virus outbreak in China might do to the Australian economy are coalescing around 0.2 percentage points of GDP growth. But it's early days, and they are relying to some extent on comparisons with the SARS outbreak in 2003. And the trouble with that is that not only was China's economy less than a tenth the size it is now, it represented a much smaller percentage of Australia's exports and tourism, as shown by this chart. Chinese people are about 15% of short-term arrivals, and that traffic has stopped in its tracks. And almost 40% of exports are to China, and they're also under unquantifiable threat. As for shares, the Australian market has fallen over the past week, but not as much as the main Asian markets, Japan, Hong Kong and Korea. And the Australian dollar has broken down below the steadily rising trading range that had been in place for 5 months, but it's still above 67. More heavy falls on those Asian markets today, and the All Ordinaries Index closed 0.4% lower. And there was another nasty prang. Nearmap, the aerial mapping service, dropped 30% after a profit downgrade caused by problems in the United States, which was the source of Treasury Wine Estates difficulties that caused its share price to be corked yesterday, although it recovered 5% today. As for the dollar, there were a couple of other events last night that contributed to it falling a bit today. The US Federal Reserve left rates on hold as expected, and the European Parliament passed the Brexit bill and sang Auld Lang Syne. The iron ore price went up today, as did gold, but oil, coal, copper and wheat all fell. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.